Key concepts. Purchases journal. Purchases returns journal. Trade payables ledger. Trade payables control account. Sales journal. Sales returns journal. Trade receivables ledger. Trade receivables control account. Credit purchase invoice. Credit sales invoice. Credit note. General journal. Assessment criteria. Source documents applicable to credit transactions are identified using appropriate examples from entities. The ability to complete business documents applicable to credit transactions from relevant financial data is demonstrated. The ability to record credit transactions of a sole proprietor in the appropriate subsidiary books and the various ledgers from source documents is demonstrated. The ability to identify incorrect entries made by the entity and correct these errors in the appropriate subsidiary journal is demonstrated. 6.1 Introduction. There are two types of transactions, namely cash transactions and credit transactions. In this learning unit, we deal only with credit transactions. In learning units 4 and 5, we dealt with cash transactions. If goods are sold or a service is rendered for cash, the transaction is recorded as follows. Dr. Bank. Cr. Sales/services rendered. What happens if a client is not able to pay cash for goods sold or a service rendered? The person selling the goods or rendering the service has the choice of granting credit to the client. Think of all the clothing, furniture, and vehicles bought on credit. Due to the high risk associated with this, many business entities do not allow credit, as people may not have the money to pay their debts. It remains the entity's choice whether to allow goods to be bought on credit, but if the items sold by the entity are fairly expensive, for example vehicles, many buyers may not be able to afford buying the product for cash. Just as individuals cannot afford to pay cash for all purchases, entities too, irrespective of their size, cannot always pay cash for transactions. So, entities sometimes also need to make use of credit, mostly to purchase goods or to buy non-current assets. With credit purchases of this nature, it is very important that comprehensive records be kept, as the purchases must be settled at some stage and great care should be taken to ensure that the necessary funds are available to pay these liabilities. This learning unit covers the purchases journal, trade payables ledger, trade payables control account in the general ledger, trade payables reconciliation, disclosure of trade payables in the financial statements, sales journal, trade receivables ledger, trade receivables control account in the general ledger and disclosure of trade receivables in the financial statements. It also covers entries in the general journal. 6.2 Purchases journal. This journal records credit transactions where goods, in which the entity trades, have been purchased. The implications of such credit purchases are important. If goods have been purchased and have not yet been paid for, it means that money is still owed to the entity it has been purchased from. An entity to which money is owed is known as a creditor, and the entity who purchased the goods on credit remains responsible for that debt until it has been settled. A creditor's account has a credit balance, as it is a liability, a current liability, for the entity who purchased the goods on credit. All credit purchases of goods, in which the entity trades, are recorded in the purchases journal. If goods are purchased on credit, the entity from which they are purchased issues a credit invoice in duplicate. The entity from which the goods are purchased keeps the duplicate and gives the original to the purchasing entity. The entry is therefore made from the original invoice. Inventory systems refer to the way in which inventory is recorded in the accounting records of a trading entity. The cost of sales and the cost price of inventory on hand can be determined according to the perpetual inventory system or the periodic inventory system. Under the perpetual inventory system, the purchase of inventory is recorded directly into the inventory account at cost price. Under the periodic inventory system, the purchase of inventory is not recorded in the inventory account. A separate account, known as the purchases account, is used to record these purchases. 2 Example of a credit purchases invoice. I am going to skip the reading of this example, but just have a look at it. Example of a purchases journal. Perpetual inventory system. Purchases journal, September 20.1 PJ1. Periodic inventory system. Purchases journal, September 20.1 PJ1. The source documents for the entries in the purchases journal are original invoices. Because these invoices come from different entities, they have different invoice numbers and formats. Entries are recorded and analyzed in date order in the purchases journal. The creditor's name and the amount for which purchases were made must be clearly shown. The amounts in the inventory, perpetual/purchases, periodic, and the trade payables columns are different because VAT is also taken into consideration when determining the amount to be entered in the trade payables column. At the end of the month, the columns in the purchases journal are added up. The totals of the columns are posted to the relevant accounts in the general ledger, and the individual transaction entries are posted to the creditor's accounts in the trade payables ledger. This process is referred to as closing off the purchases journal. At the beginning of the next month, a new purchases journal is opened. Where applicable, provision must be made for a VAT input column in the purchases journal. This column may not always be used, as the entity from which the goods were purchased might not be registered as a VAT vendor with SARS. If, on the other hand, the entity is registered for VAT, VAT in the purchases journal must be accounted for at the current rate of 15%. The entity, from which the merchandise was purchased, is responsible for paying the VAT to SARS. The VAT included in the purchase price by the entity is debited against the VAT input account when the purchases journal is closed off at the end of the month. The inventory, perpetual/purchases, periodic, column will only show the net amount of purchases. The net amount of purchases is the amount paid/payable for the purchases less the VAT that was added to the purchase price. The purchases journal is closed off at the end of each month. The closing off procedure can be summarized as follows. Add the inventory, perpetual/purchases, periodic, and VAT columns of the purchases journal and make sure that the figures cross-balance with the total of the trade payables column. Transfer the individual transaction entries to the corresponding creditor's personal accounts in the trade payables ledger. Post the column totals of the purchases journal to the relevant accounts in the general ledger, taking care to observe the golden rule of accounting. For each debit entry, there must be an equal credit entry. Enter the folio numbers from the General Ledger and Trade Payables Ledger in the appropriate column in the Purchases Journal. For recording of transactions from credit purchases invoices. The following transactions took place in BS Electrical during September 20.1. Required. Record the above transactions in the Purchases Journal of BS Electrical for the month of September 20.1. Perpetual Inventory System. BS Electrical Purchases Journal, September 20.1 PJ1. Periodic Inventory System. BS Electrical Purchases Journal, September 20.1 PJ1. Purchases Returns Journal. If an entity buys merchandise or other items on credit and is not entirely satisfied with its purchase, it is entitled to return these items. When an item is returned by an entity, the transaction is recorded on a debit note. This debit note is sent together with the item to the entity it was purchased from. Upon receipt of the debit note and returned item, the selling entity issues a credit note in duplicate. This credit note acknowledges that the selling entity received the returned goods and that they are crediting the account of the entity who returned the goods. Remember that the purchasing entity is a debtor, recognized in the trade receivables control account, in the selling entity's book, and when the goods were originally purchased, the purchasing entity's account was debited. By crediting the purchasing entity's account with the amount of the returned goods, the purchasing entity now owes the selling entity less. As in the case of the Purchases Journal, only goods in which the entity trades are recorded in the Purchase Returns Journal, whereas all other items, for example stationery bought and returned, are recorded in the General Journal. A debit note is sent to the seller, together with the returned goods. The selling entity acknowledges receipt of the goods and issues a credit note. The entry is made from this credit note, which is similar to the credit note illustrated in the section on sales returns. Under the Perpetual Inventory System, if inventory is returned to the seller for one reason or another, the return of inventory must be recorded in the inventory account. Under the Periodic Inventory System, if inventory is returned to the seller, the return of inventory cannot be recorded in the inventory account but must be recorded in a separate account known as the Purchases Returns account. 6. Example of a credit note. Example of a Purchases Returns Journal. Perpetual Inventory System. Purchases Returns Journal, September 20.1 PRJ1. Periodic Inventory System. Purchases Returns Journal, September 20.1 PRJ1. The procedure at the end of the month is the same as for the Purchases Journal. 8. Recording of transactions from a credit note. The following transaction took place in BS Electrical during September 20.1. Required. Record the above transaction in the Purchases Returns Journal of BS Electrical for the month of September 20.1. Perpetual Inventory System. BS Electrical Purchases Returns Journal, September 20.1 PRJ1. Periodic inventory system. BS Electrical Purchases Returns Journal, September 20.1 PRJ1. Trade Payables Ledger. Just as records of all transactions that the entity had are kept in the general ledger, records need to be kept of all transactions with individual creditors. Apart from the general ledger, a subsidiary ledger, called the Trade Payables Ledger, is kept. In this ledger, an account is opened for each individual creditor. The transactions from the Purchases Journal and Purchases Returns Journal are posted to these individual accounts. The purpose of this ledger is to enable the entity to, at any time, know what amount is payable to each individual creditor. It is also important that if the balances of the individual accounts are added, they should correspond with the balance of the Trade Payables Control account in the general ledger. 6.5 Payment to a creditor and settlement discount received. When creditors are paid within a specified period according to an agreement, the entity may get a discount on the outstanding amount. We refer to this discount as settlement discount received. 6.6 Trade Payables Control account in the general ledger. The Trade Payables Control account in the general ledger must reflect a summary of all the transactions with creditors recorded in the Trade Payables ledger. The Trade Payables Control account is prepared from the total of the Trade Payables column in the Purchases Journal and the Purchases Returns Journal. Creditors are recorded in two ledgers, namely as a control account in the general ledger and as individual accounts in the Trade Payables ledger. An entity should be able to tell, at any time, what amount is owed to all outstanding creditors as a collective. 1.0 Illustrative example of posting from the subsidiary journals for credit purchases and credit purchases returns to the Trade Payables Control account in the general ledger. Periodic inventory system. BS Electrical Purchases Journal, September 20.1 PJ1. BS Electrical Purchases Returns Journal, September 20.1 PRJ1. 1 Required. Post the Trade Payables totals of the above journals to the Trade Payables Control account in the general ledger. BS Electrical General Ledger. When using the perpetual inventory system, the debit entry will be inventory and VAT. Plus, when using the perpetual inventory system, the credit entry will be inventory and VAT. 6.7 Trade Payables Reconciliation. At the end of each month, an entity receives statements of account from each creditor, indicating the amounts owing. The balances shown on these statements should correspond with the creditor's individual accounts in the Trade Payables ledger. If not, an investigation will have to be carried out to determine the reasons for the difference. The easiest way to try to trace errors is by means of a Trade Payables reconciliation. This is done in the same way as a bank reconciliation, which will be dealt with in a later learning unit. Tick off all the corresponding items on the statement and on the creditor's personal account. Circle the items that do not correspond on the statement and the creditor's personal account. Correct the errors on the relevant creditor's account and the control account. Rectifying of errors in a Trade Payables reconciliation. If errors appear in a creditor's account in the Trade Payables ledger, then these errors must be rectified in the general ledger, Trade Payables Control account. It will also be necessary to update the individual creditor's account. If errors appear on the statement received from a creditor, the creditor should be notified to enable him/her to correct his/her own records. In the entity's records, the errors will appear on the trade payables reconciliation statement. 6.8 Disclosure of trade payables in the financial statements. Trade payables will be disclosed as trade and other payables in the statement of financial position under the heading Current Liabilities. Purchases will appear in the statement of profit or loss and other comprehensive income as part of cost of sales. Purchases returns are deducted from purchases. This is done as a closing entry by way of the general journal and is discussed in a later learning unit. 6.9 Sales Journal. All transactions in respect of goods, in which the entity trades, sold or services rendered on credit are entered in the sales journal. When a client buys goods, an invoice is issued and the entry is made from the copy of the invoice, which remains in the invoice book, with the original invoice being issued to the client. The person who buys merchandise from the entity on credit is referred to as a debtor, and he/she will remain as a debtor until he/she pays all the money he/she owes the entity. Under the perpetual inventory system, at the time of sale, the cost price of goods sold is transferred from the inventory account to the cost of sales account. Under a periodic inventory system, the cost of sales is not determined at the time of the recording of the sale. The cost of sales can thus only be determined at the end of the financial period after a physical inventory count has been done. For 5 example of a credit sales invoice. Note, there is no special difference between the invoice used for cash sales and the one used for credit sales. In most entities, the layout of the cash and credit invoices is exactly the same. 1.2 Example of a sales journal. Perpetual inventory system. Sales journal, September 20.1 SJ1. Periodic inventory system. Sales journal, September 20.1 SJ1. The source documents for the entries in the sales journal are the duplicates of the sales invoices. The debtor's name and the amount of the transaction should be clearly indicated. Entries are recorded and analyzed in date order in the sales journal. The amounts in the sales and the trade receivables columns are different as we are taking VAT into consideration in the trade receivables column. At the end of the month, the columns in the sales journal are added. The totals of the columns are posted to the relevant accounts in the general ledger, and the individual entries are posted to the debtor's accounts in the trade receivables ledger. This process is referred to as closing off the sales journal. At the beginning of the next month, a new sales journal is opened. Where applicable, provision must be made for a VAT output column in the sales journal. VAT in the sales journal must be accounted for at the current rate of 15%. The VAT included in the selling price by the entity is credited against the VAT output account when the sales journal is closed off at the end of the month. The sales journal is closed off at the end of each month. This procedure can thus be summarized as follows. Add the sales and VAT output columns of the sales journal together and make sure that the figures cross-balance with the total of the trade receivables column. Transfer the individual entries to the corresponding debtor's personal account in the trade receivables ledger. Post the column totals of the sales journal to the relevant accounts in the general ledger, taking care to observe the golden rule of accounting. For each debit entry, there must be an equal credit entry. Enter the folio numbers from the general ledger and trade receivables ledger in the appropriate column in the sales journal. 1.3 Illustrative example of recording transactions in a sales journal. BS Electrical issued the following invoices during September 20.1. Required. Record the above transactions in the sales journal of BS Electrical for the month of September 20.1. Perpetual Inventory System. BS Electrical. Sales Journal, September 20.1 SJ1. Periodic Inventory System. BS Electrical. Sales Journal, September 20.1 SJ1. Sales Returns Journal. If a service is rendered or goods, in which the entity trades, are sold on credit and the client is not entirely satisfied, then the client may demand to be refunded in part or in full. If, however, the account has not yet been settled, the amount paid back to the client will simply be credited to the debtor's account. These types of transactions, however, must also be recorded in a book of first entry, journal, and the journal used in this particular case is the Sales Returns Journal. Under the Perpetual Inventory System, the cost price of goods previously sold and now returned is transferred from the cost of sales account to the inventory account. Under a Periodic Inventory System, the cost of sales is not determined at the time of the recording of the sales returns. A credit note must be issued to the client to acknowledge the fact that the goods/merchandise were returned. A credit note is completed in duplicate and the original is handed to the client. 15 Example of a credit note. Example of a sales returns journal. Perpetual Inventory System. Sales Returns Journal, September 20.1 SRJ1. Periodic Inventory System. Sales Returns Journal, September 20.1 SRJ1. The procedure at the end of the month is the same as that for the sales journal. Illustrative example of recording transactions in a Sales Returns Journal. The following source documents were obtained from BS Electrical during September 20.1. Required. Record the above transactions in the Sales Returns Journal of BS Electrical for the month of September 20.1. 19 Solution. Perpetual Inventory System. BS Electrical. Sales Returns Journal, September 20.1 SRJ1. Periodic Inventory System. BS Electrical. Sales Returns Journal, September 20.1 SRJ1. Trade Receivables Ledger. Just as records of all transactions of the entity are kept in the general ledger, records need to be kept of all transactions with individual debtors. Apart from the general ledger, a subsidiary ledger, called the trade receivables ledger, is kept. In this ledger, an account is opened for each individual debtor. The transactions from the sales journal and sales returns journal are posted to these individual accounts. The purpose of this ledger is to enable the entity to, at any time, know what amount is owed by each individual debtor. It is also important that, if the balances of the individual accounts are added, they should correspond with the balance of the trade receivables control account in the general ledger. 6.12 Payment from a debtor and settlement discount granted. Discount is often offered to debtors to encourage a quick settlement of their debts within the stated credit term. The credit term will be shown on the credit invoice, for example, 30 days from the date of sale. This means that if a debtor pays off his/her account before 30 days from the date of sale, the debtor will receive a discount on the total amount owing. 6.13 Trade receivables control account in the general ledger. The total of the individual debtor's account balances in the trade receivables ledger should be equal to the balance of the trade receivables control account in the general ledger. When there are differences, it may be that the entity has forgotten to transfer a transaction or that a transaction has been transferred incorrectly. Debtors are recorded in two ledgers, namely as a control account in the general ledger and as individual accounts in the trade receivables ledger. An entity should be able to tell, at any time, what amount is owed by all outstanding debtors as a collective. Illustrative example of posting from the subsidiary journals for credit sales to the trade receivables control account in the general ledger. Periodic inventory system. BS Electrical. Sales Journal, September 20.1 SJ1. BS Electrical. Sales Returns Journal, September 20.1 SRJ1. Doc No. 0 required. Post the trade receivables totals of the above journals to the trade receivables control account in the general ledger. 2-1 Solution. BS Electrical, General Ledger. When using the perpetual inventory system, the entries in the cost of sales and inventory accounts must also be recorded. 6.14 Disclosure of trade receivables in the financial statements. Trade receivables will be disclosed as trade and other receivables in the statement of financial position under the heading Current Assets. Sales will appear in the statement of profit or loss and other comprehensive income. Sales returns will be deducted from sales. This is done as a closing entry by way of the general journal and is discussed in a later learning unit. 6.15 General Journal. The general journal is used for recording all transactions that do not fit or cannot be recorded into any of the other subsidiary journals. Example of a general journal. The account which is entered first is the account which must be debited in the general ledger. The account that is going to be credited is entered on the next line and a little to the right so that it can stand out from the account that is going to be debited. The journal narration is very important since it gives the reason for the entry and must also refer to the source documents. The general journal is a book of first entry. The double entry principle must be applied in the general ledger when posting this journal. 6.15.1 Interest charged on overdue accounts. Many entities charge interest on the outstanding debt if an account is not paid within the credit term. Interest charged on overdue accounts is regarded as an interest income. Interest income is classified as an income account and is therefore credited because it increases equity. The trade receivables control account/personal account of the debtor is debited because it is an asset account, and the interest charged on the overdue account is added to the original amount owed by the debtor. 6.15.2 Credit losses. With every credit transaction, there is always a possibility that the debt might not be paid. These unpaid debts must be written off as a credit loss. If a debtor owes money to an entity and he/she cannot pay, and if all the proper measures were taken by the entity to recover the outstanding debt but failed, then the amount the debtor owes must be written off as a credit loss. 6.15.3 Correction of errors. Sometimes transactions are entered in the incorrect ledger accounts. The correction of these errors is made in the general journal. Illustrative example of recording transactions in a general journal. The following transactions took place in BS Electrical during September 20.1. 30. Mrs. J. Johnson's account of R800 was 6 months overdue and interest was charged at 10% per annum. Mr. T. Thomas's account of R230 must be written off as irrecoverable. It was found that repairs done to the delivery vehicle for R1200 were incorrectly debited to the insurance account. This error must be corrected. 2.2 Required. Record the above transactions in the General Journal and General Ledger of BS Electrical for the month of September 20.1. BS Electrical. General Journal, September 20.1, GJ9. Comprehensive Example 1. Recording credit transactions on source documents. The following transactions took place in BS Electrical during January 20.1. 2. Mr. P. Smith bought 20 boxes of energy-saving light bulbs, product no WT217, on credit for R240 per box, exclusive of VAT. Invoice number 003 was issued to Mr. P. Smith, whose address is 12 Harriet Street, Pretoria. 8. Mr. P. Smith returned 10 boxes of energy-saving light bulbs worth R2400 VAT exclusive that was bought on January 2. Credit note no CN003 was issued. 10. Sold 23-point plugs, product no WT895, for R12 each to Mr. H. Matlock on credit. Invoice number 004 was issued to Mr. H. Matlock, whose address is 2 Wade Street, Valhalla. 2.3 Required. Record the above transactions on the source documents provided below. Solution. Comprehensive Example 1. BS Electrical. 499, Chwane Drive. Comprehensive example 2. Recording of credit transactions in subsidiary journals. You are supplied with the following source documents from BS Electrical. BS Electrical is registered as a VAT vendor. All the suppliers of the entity are also registered for VAT. BS Electrical. P.O. Box 392. For required. Complete the following books of prime entry for BS Electrical for June 20.8. Make use of the column headings as indicated. BS Electrical uses the periodic inventory system. BS Electrical. Purchases Journal, June 20.8 PJ6. Purchases Returns Journal, June 20.8 PRJ6. Sales Journal, June 20.8 SJ6. Sales Returns Journal, June 20.8 SRJ6. General Journal, June 20.8 GJ6. Post the journals after closing to the appropriate accounts in the General, Trade Receivables, and Trade Payables ledgers. Balance all accounts. Prepare the Trade Receivables and Trade Payables lists. Solution, Comprehensive Example 2. BS Electrical. Purchases Journal, June 20.8 PJ6. Doc No. Purchases Returns Journal, June 20.8 PRJ6. Sales Journal, June 20.8 SJ6. Sales Returns Journal, June 20.8 SRJ6. General Journal, June 20.8 GJ6. Five Comprehensive Example 3, Recording of Credit and Cash Transactions in the Subsidiary Journals. The following transactions at 15% VAT inclusive took place in Sunshine Glass Traders for February 20.4. are February 1st. The owner, S. Shine, increased his capital. 15,000. Paid the City Council for water and electricity via Internet banking. 3,105. 3. Purchased merchandise from Glasgow Ltd. and paid via Internet banking. 8,855. Purchased merchandise on credit from Ferguson Ltd. 9,200. Sold trading inventory on credit to J. Jason. 14,950. 4. Purchased a desk on credit from City Furnishers. 3,680. 6. Purchased receipt books and pens from Pen and Pencil and paid via internet banking. Six required. Record the above transactions in the following subsidiary journals of Sunshine Glass Traders for February 20.4. Cash Receipts Journal, Analysis Columns for Bank, Sales, VAT Output, Trade Receivables, Settlement Discount Granted, DR, VAT Input, DR, and Sundry Accounts. Cash Payments Journal, Analysis Columns for Bank, Purchases, Trade Payables, Settlement Discount Received, CR, Wages, VAT Input, VAT Output, CR, and Sundry Accounts. Sales Journal, Analysis Columns for VAT Output, Sales, and Trade Receivables. Purchases Journal, Analysis Columns for VAT Input, Purchases, and Trade Payables. Sales Returns Journal, Analysis Columns for VAT Output, Sales Returns, and Trade Receivables. Purchases Returns Journal, Analysis Columns for VAT Input, Purchases Returns, and Trade Payables. General Journal. Post the entries recorded in the subsidiary journals to the relevant accounts in the general ledger of Sunshine Glass Traders. All the accounts must be properly balanced/totaled at 28 February 20.4. For the purpose of this example, document numbers are not required. Day. Details. Solution, Comprehensive Example 3. Sunshine Glass Traders. 1. Subsidiary journals. Sales Journal, February 20.4 SJ2. Purchases Journal, February 20.4 PJ2. Sales Returns Journal, February 20.4 SRJ2. Purchases Returns Journal, February 20.4 PRJ2. General Journal, February 20.4 GJ2. Self-assessment. 145. After you have worked through this learning unit, are you able to correctly enter credit purchases and credit purchase returns transactions in the respective journals? Correctly enter credit sales and credit sales returns transactions in the respective journals? Correctly prepare the trade payables control and trade receivables control accounts in the general ledger? Correctly prepare a trade payables and trade receivables list? Provide for VAT implications on credit transactions? Correctly enter transactions in the general journal? If you have marked all, you may continue to the next learning unit. If you have marked any, you have to revise that specific section. If you have marked any, you have to restudy that specific section.